Wrap up this edition of On the Record with me, Shireen Bhan. From all of us on the program, many thanks for watching.
And welcome to Startup Street. I'm Ritu Singh, and with me is Arundhati Ramanan. Here are the key headlines from the startup space. Wealth tech platform Dezerv adds $40 million to its kitty. The Series C round was led by Premji Invest and Axel's Global Growth Fund, with participation from Elevation Capital and Z47. These will be used to enhance client experience, strengthen tech stack, and expand offerings.
CNBC-TV18 exclusive SpeakX bagged $16 million in a pre-Series B round led by Westbridge, Elevation and Goodwater Capital also participate. Will use the funds to power new regional language launches and make AI-led English learning accessible across India's heartland.
Chara Technologies raises 52 crore rupees in a Series A round that was led by Arkham Ventures with participation from Xfinity Ventures, Kalari Capital, and IIMA Ventures. It plans to use the funds to expand manufacturing capacity and accelerate new product development.
Bengaluru-based fintech Good Score bags $13 million. The Series A funding was led by Peak 15 Partners with participation from Stellaris Venture Partners and Saison Capital. The proceeds will be used to expand its AI systems, add product and engineering talent, and grow its credit marketplace that connects borrowers and lenders.
Cryptocurrencies rebound after witnessing the largest liquidation in history over the weekend. The industry saw liquidations to the tune of over $18 billion on the back of an escalation in US-China trade tensions. So those are the headlines we're tracking for you today. But our top story, wealth tech startup Dezerv has raised 350 crore rupees in a Series C funding round, which brings its total capital raise to more than 850 crore rupees. This round was all primary. It was backed by its existing investors, Premji Invest and Axel's Global Growth Fund, with continued participation from Elevation Capital and Z47. Now, founded in 2021, Dezerv already manages more than 14,000 crores in assets and says it has helped 5 lakh users track 2 lakh crores in personal wealth. Joining us now is Sandeep Jethwani, the co-founder of Dezerv, to discuss this funding milestone, the growth strategy, and of course the company's ambition to redefine wealth management for India's emerging class of wealth creators. Sandeep, welcome to the show and thanks so much for being here. Congratulations on this fundraise. Start by telling us what the key drivers behind this round were and how do you plan to deploy this fresh capital?
Thanks, Ritu, and great to see you again. Thank you for the congratulations. From our perspective, look, India's wealth creation story is just beginning. We are at 12 trillion of savings right now, likely to go to about 100 trillion in savings in the next 20 to 25 years. Hardworking wealth creators are creating significant wealth. We are expecting nearly 1 crore crore-patis in India. Now, to serve this particular emerging segment, I think that we have a responsibility to elevate our client experience. And how do we do that? One is to improve the technology experience, the UI, UX that these individuals face. So working heavily with the account aggregator ecosystem to be able to track net worth across the board. The second is how can we improve and develop our investment solutions, go deeper into newer asset classes and be able to serve these clients with complex wealth management problems. And the third is to strengthen our relationship manager base and be able to help our relationship managers serve a much larger client segment. So those are the areas, Ritu, that we are investing in.
Sandeep, 1 crore crore-patis, what will that mean in terms of business? You've crossed about 14,000 crores in assets that you manage. How sustainable is this pace of growth and what kind of client acquisition costs and retention metrics are telling you about scale efficiency?
Ritu, I think in our business, as trust develops, as clients begin to experience a better wealth management experience overall, they refer clients to us. So the cost of acquisition declines. But I think more importantly, they trust us with more of their capital. All of these individuals are people whose wallet size is also expanding. So I think it's a big responsibility and an opportunity for us to serve them well so that they stay with us. Currently, retention numbers are very, very strong. We believe that most of these clients are here with us for the long term, so long as we keep doing right by them, and that's the objective.
But what will this 40,000 crore number, Sandeep, look like, say, a year, 2 years down the line? What sort of internal targets are you working with?
Ritu, I think we should continue to double our assets under management on a yearly basis. I actually feel that even our existing clients, the behaviors that we are seeing as they are coming in and adding more to their portfolios at Dezerv. So that's a very clear trend line. We are also able to acquire clients at a much faster clip. So doubling every year, at least for the foreseeable future, should be possible.
All right, doubling every year on a relatively smaller base. But Sandeep, we keep hearing about this Bharat opportunity across corporates, across sectors. Even with investors, there's record growth, there's rising affluence you spoke of beyond just the tier 1, beyond metros. Where are you, though, seeing the strongest demand, across these? And are these young professionals? Are these business owners? Just give us some trends you see.
Ritu, I think it's a massive opportunity ahead of us. If you look at the tier one segment, there's opportunity to go deeper. Newer businesses, especially in the new economy category, are getting created. So we are seeing founders, CXOs creating meaningful wealth. You're seeing a spate of these IPOs that are happening. So that's one. Secondly, even within tier one, we are seeing senior working professionals, CXOs, create meaningful wealth, even in sort of traditional businesses. So that's one part of it. On what you call Bharat or tier two, we are seeing a whole host of SMB owners create meaningful wealth. There's a massive formalization of economy that we are seeing. And as more of this formalizes, incrementally, a lot of this capital is flowing into financial assets. So I think there's a trend of greater formalization compounded by financialization, and that's really interesting for us right now.
Just quickly, last question, Sandeep. Dezerv has spoken about transitioning into this full stack wealth manager. I mean, we want to understand beyond what you're already offering. What does this look like in practical terms for clients, and how close are you to achieving that vision?
Ritu, honestly, on that, it's early days, but I think we are being guided by our clients into areas where they need help from us. So obviously, there's the asset side where they want us to manage more of their portfolio, but there are also issues that they face around the loans that they have or the liabilities in their own balance sheets, and the needs around risk and protection, which is how do they secure themselves and their families. So I think these two categories, which is liabilities and risk and protection, are areas where we will deepen our offerings on.
All right, we'll wait to hear more on that, Sandeep. Thank you so much for your time here today, and congratulations again on your fundraise. Thank you.
Thank you for having me, Ritu.
On what's brewing, India's AI-powered edtech story is getting louder and more profitable. SpeakX.ai, the country's largest generative AI English-speaking platform, has just raised $16 million in a pre-Series B round led by Westbridge, Elevation and Goodwater Capital. The startup, already EBITDA positive, helps millions of Indians improve spoken English through AI-driven conversation. With over 200,000 paying subscribers and a $7.5 million ARR, SpeakX says this funding will power new regional language launches and make AI-led English learning accessible across India's heartland. Joining me now to discuss this further is Arpit Mittal, the founder and CEO of SpeakX. Arpit, thank you so much for taking time out and being here with us on Startup Street. Before we get to this fundraise, right, if you could sort of talk to us about what SpeakX does and, take us through your key offerings.
Sure. Hi, thank you for having me on the show. What we do at SpeakX, we help people improve their English communication skills. So as we know, a large part of India can actually operate in English, right? Even when we go to tier 2 towns and tier 3 towns, we see all these billboards written in English. It means that people can fundamentally read and comprehend English to some level. Now, the challenge was that they don't have enough confidence to speak properly, right? They have a fear that others will make fun of them. What if they make mistakes? So they generally avoid speaking in English. So what we do is we help them overcome this judgmental pressure from their peers and help them improve their English communication skills.
Congratulations on the fundraise, right? $16 million in a pre-Series B round. It's quite a strong vote of confidence for, your model. So what will be your top 3 priorities for this capital, especially when how you plan to sort of disburse the funds?
Sure. I think primarily we are going to use the fund to build a stronger product. So learning anything is a multi-year process, right? It takes time for people to really master a skill. So what we are doing is we are creating stronger modes within the product, gamify the product, improve the AI experience, improve the latency, try and help our learners achieve their goals. Because how we look at it is we are a very strong impact product. So we help people transform their lives. So idea is that if we can utilize this capital wisely to improve the product experience, that is going to give us help us achieve our long-term goals.
Sure. And you've already achieved profitability, right? And you have a $7.5 million ARR currently. What's sort of driving this efficiency and sustainable growth at this point?
I believe that was a choice we made around 2 years back. We said that we'll use the capital to build the product, but we'll not use the capital to grow the product. So when we actually grew, we kept in mind that we need to be very cost efficient, and we did it from the very beginning, because to serve for the Indian market, that's what you require. Like, you cannot ask dollar value from the Indian customers, right? It need to be in INR. And to do that, the systems need to be very cost efficient. So we are able to scale it up at a very cost efficient way that helped us drive profitability. And for us, the role model was Nikhil Kamath. Like, we have seen in the past that even pure tech startups can practically scale with profitability, and that's exactly what we did in the last 18 months.
All right. And SpeakX has over 200,000 paying users and 1 million monthly learners, right? So where is this demand coming from? Is it the metros, tier 2, 3 cities or beyond? So, and where do you want to focus all your attention going forward?
Sure. So primarily, these are people who come from middle class and lower middle class, right? Even someone coming from a metro city, so the background is they come from humble backgrounds, who have a very high aspiration to learn English. So we have customers across from tier 1 to metros to tier 2, tier 3. The spread is across. Primarily, we have expanded in the Hindi-speaking belt right now, and going forward, we have already started expanding to other native languages like Tamil, Telugu, Malayalam, Kannada. So that's where the next 1 year is going to be for us to focus on.
All right, that was actually going to be my next question, because 70% of your learners, being Hindi speaking, how will sort of the regional language expansion, like you mentioned, into Tamil, Telugu, Marathi and others, sort of shape your next phase of growth?
Yes, so we believe India is a very, very large market for a product like us, right? We are relevant for every Indian. So practically, what we are now going to do is we have stabilized our engagement, we have stabilized our funnels, and we have achieved great unit economics. So the idea is to expand into different regional territories, and grow the market, capture the market in those territories as well. So the capital that we have raised will help us expanding faster with profitability in place.
With profitability in place. And if you could quickly answer, you've set ambitious targets. You've got like 100 crore annual EBITDA and a 300 to 400 million business in 2 to 3 years, right? What sort of gives you that confidence that SpeakX can achieve this?
Sure. So I'll tell you, the product that we have built is relevant at a population level. So it's not a product for few, it's a product for all. So if you look at India as a market whole, so 40% of Indians actually have an aspiration to learn to speak English, and I'm primarily talking about young Indians, right? With that kind of a market, and this is a new market which has been created because of Gen AI. Because prior to Gen AI, it was practically not possible to teach people any spoken language for that matter using technology. So the only alternative was that a human need to teach that part. So we are targeting like 10 to 15% of India at a population level. And we being the first mover in the market have a clear edge, and we have spent last 1.5 years building a very strong product. So that gives us the confidence that we will be able to scale it in the next 2 years to more than 100 million, more than
Sure.
$200 million of revenue with 100 crores of top line EBITDA positive. Yeah.
All right, Arpit, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best going forward.
Thank you so much.
On that note, it is time for us to head into a short break. Coming up next, in a bid to empower over 75 ambitious startups across India, Kotak Mahindra Bank launches Season 2 of its flagship CSR initiative, the Kotak Bizlabs Accelerator Program. Details when we come back. Stay tuned.
Welcome back. You're tuned into Startup Street. Now, Kotak Mahindra Bank has just launched Season 2 of its flagship CSR initiative, which is the Kotak Bizlabs Accelerator Program, and it is aimed at empowering more than 75 startups across India, with partnerships spanning top incubators from IIT Delhi, IIM A Ventures, IIM Bangalore, T-Hub and others. It promises deep mentorship, catalytic funding and expanded reach into Tier 2 and Tier 3 cities as well. Joining us today to talk about this initiative are Rohit Bhasin, President and Head of Affluent NRI and Business Banking and Chief Marketing Officer at Kotak Mahindra Bank, and with him, Himanshu Nivsarkar, the Head of CSR and ESG at the bank. Also with me is my colleague Arundhati. Rohit, Himanshu, both of you, thank you so much for your time here. Rohit, let me start with you. In Season 1, we read that there were 1,500 or more applications and 32 startups ended up receiving the funding from Kotak. First, start by telling us, how the follow-on rate of these 32 ventures has been, how they performed, and the thinking behind now scaling it to more than 75 this time.
Thanks, Ritu, for having us here today. So look, when we started Kotak Bizlabs Season 1, we just realized the real problems, three fundamental problems that we saw in the startup ecosystem in India. The first one was that 90% of the startups fail to survive beyond the year 5, and they don't really get access to strategic mentorship, markets and funding. The second thing we saw was there's a gap in the ecosystem, that the early revenue startups don't really make up to the product market fit, and they don't have access to quality acceleration platforms. The third key insight for us was that startups are not just a privy of the metros, but there's a huge hunger and drive and desire in startups in the Tier 2 and Tier 3 cities as well. What they just want is the platform. And that really made us, start Kotak Bizlabs in the first season. The three things that we are providing is access to funding, mentoring, and networking. And we worked with, quality accelerator platforms from IIM A Ventures, NSRCL from IIM Bangalore and T-Hub. And we've, as you said, we've kind of got 55 plus startups who've got selected as a part of the first season. So we're very excited with the results which we've got in the first season. It's very early because we just started the first season at the beginning of the year. It's just been over 6 months. But we're very happy with the initial results that we're seeing the startups trying to build sustainable businesses.
Sure. Himanshu, let me bring you into the conversation. If you could sort of tell us what the key learnings from the first phase that you've learned that you've applied to Season 2's design and strategy, especially, when it comes to closing the gap in how early revenue startups are supported in India right now.
So a couple of things. I think one, we sort of expanded our presence in the Tier 2, Tier 3. So this year we are planning to do more in Tier 2, Tier 3. So that's one expansion of the footprint which is happening, which is a clear important one. The other thing was we started out working with 3 different incubators. Each had their own way of running the program. While we have not interfered with that, we have harmonized it so that a company which is sort of working with, let's say, in Bangalore with NSR Cell has a similar sort of an experience as a company which may be working with IIM Ahmedabad, IIM A Ventures in Ahmedabad. So we have tried to harmonize the areas, and that's represented in the way we have gone about shortlisting the companies, the way we would go about funding these companies. So there's a lot more harmonization that has happened.
Well, Rohit, let me get back to what we were talking about in terms of 1,500 applications, but 32 funded. Of course, we know you have a process, but we're talking about a 2% success rate for these companies. What happens to the rest? Do they get lost in the process, or is there a way you're capturing the learnings or follow-ups beyond the winner circle?
So there is a light touch model as well as a more deeper model where we taken few of the startups and taking them all the way. So about 800 plus startups were given mentorship guidance to our network from our 3 incubators that we worked with, wherein they engaged with them on a lighter touch model. And they still have access to the startups ecosystem, the incubators ecosystem that we have. The 55 startups which are selected and taken to the final stage are the one which will have a much deeper integration in terms of helping them run through the whole process and finally giving them access to funding and networking in the markets. But we have provided guidance to the 800 startups who don't make it to the next round, but still have access to the guidance of these incubator platforms.
Sure. And, Himanshu, we're running out of time, but if you could quickly tell us, we understand, Kotak's focus is on Tier 2 and Tier 3 cities, right? So how is the program structured to identify and nurture innovation emerging from these sort of less visible ecosystems? Founders in those regions often cite lack of access to serious investors. So how will Bizlabs connect them to actual capital and not just mentorship or workshops?
So right from the selection of the incubators, we've chosen entities which have a similar philosophy, which is basically to take the incubation to Tier 2 and Tier 3 cities. We are doing a lot of road shows in these smaller cities where we will spread awareness about Bizlabs, and we will continue to engage. So it's not just that, at the beginning of the program, you do some road shows and then you forget about it. We will continue to engage with these city-based network over a full year. So that way we will be able to get a much deeper sort of an engagement in these cities.
Rohit, finally, traditionally banks have been risk-averse institutions, and how does Kotak reconcile the DNA with supporting these what you call audacious founders who may not fit conventional business models?
To our fundamental belief, which is our brand promise of "Hausla hai to ho jayega," is that doesn't matter if you're the son of the richest businessman in this country or the son of a chai wala wanting to start your own business. As long as you have an audacious dream, you have the aspiration, you believe that you can make something about your life, you want to be the partner that backs you into empowering you to achieve those dreams. That's our fundamental belief, which is our brand proposition. And we really think this is about bringing our brand purpose to life, making it the heart of our business model. Our purpose has to be about financial empowerment for all. Skewed financial growth is not going to work in the country, and we really want to make sure that anyone who has a dream, we can be the backing or the partner or the harness in helping you achieve those dreams. That's really what our objective is and our purpose in life is.
Well, that's nice to hear, but we're out of time. Rohit and Himanshu, we wish you the best with Season 2, and it's been a pleasure having you here. Thanks for your time.
Thank you.
Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.